Hey Tim, thanks very much for joining us. It's great to be with you.
Happy to be here, Wilfred.
Here in
great view.
Great view. Great for my first experience here in San Francisco, and of course Wells Fargo's home state and hometown. And it's been a year in the job, so congratulations for that.
Thank you.
Year at CEO. I wanted to start with the Q3 numbers,
Sure.
which clearly did disappoint. Shares fell on Friday off the back of it. Yeah. In particular, disappointing loan growth relative to peers. So talk us through that. How much of that is by design, and how much of it is coming from factors outside of your control?
Sure. So when you look at our loan portfolio, let's talk about the consumer loans and the commercial loans. On the consumer side, we saw good growth in our mortgage business and then also in our credit card business. Credit cards were up about 5% year over year. The two consumer loan categories that were down were one, home equity, which has been running off since the crisis. It used to be the portfolio that everybody was concerned about, and now they want to know why it's running off. My expectation is we're going to continue to grow the home equity. We will do more home equity loans next year than we do this year. And then on the auto side, a year ago, we made a strategic decision when we looked at the auto market that it was getting a little bit aggressive, and so we pulled back just a bit. But overall, consumer loans grew from the second quarter to the third quarter.
And I guess one area that lots of investors are fascinated by is to what extent the slower loan growth is driven by consequences of the sales practice scandal, which you mentioned on the call. So talk us through how that scandal has impacted some of those softer loan growth numbers.
Sure. It really hasn't had much impact on the commercial side of the business, medium-sized and larger corporate customers. There's been a small impact on our government and institutional banking business. In the wealth and investment management business, we've continued to see good loan growth. Again, no major impact there. On the consumer side, the primary impact has been referral activity from our branches. And that's been in the low single digits in terms of the impact. But we're seeing that improve over the last couple of quarters, right? It's not back to where it was a year ago because of all the changes that we've been making in our retail bank.
And I guess that's, again, a key question for investors. You know, legal costs aside, settlements aside, which are sort of one-offs, the fundamental business, will it ever recover back to the growth rates you saw of the past? And I guess with it, crucially for the share price, the earnings multiple you saw of the past, or permanently are you stuck on this slightly lower level now?
Well, I hope not. I mean, Wilfred, we're in the midst of transforming Wells Fargo. We've made fundamental changes in terms of how we're organized, fundamental changes in our retail bank in terms of how folks are being compensated. We're turning over every rock in the company, and we're making really good changes, not only to fix anything that was broken, but also in terms of investing and making a lot of changes in terms of new products and services. So I'm very optimistic and confident that over time we'll achieve growth rates that we've seen historically.
Away from those earnings, a couple of other in the news questions. Bitcoin.
Sure.
Lots of comments from your peers. Are you in the camp that it's a fraud or that it's an opportunity?
Those are two ends of a big spectrum. I think in terms of the underlying technology, it's very interesting. Distributed ledger technology is very interesting in terms of how it can be applied to all sorts of products and services within financial services. We've got investments, we've got partnerships, we've got consortiums looking at that all the time. In terms of it as a cryptocurrency, I'd probably rather own $1 than a dollar Bitcoin.
Oh yeah, well, it would cost you more as well. We're about 5,500 at the moment. But let's also just quickly touch on the Fed. President Trump's meeting with Janet Yellen tomorrow to talk about her future. Do you think her tenure has been good enough to warrant an extension of her term?
I think that Chair Yellen has done a terrific job in terms of guiding the Fed through a difficult transition, which is a period of very low rates and a large balance sheet, to starting to bring the balance sheet down and start to increase interest rates because we've seen a growing economy. So I think she's done a good job. In terms of who is the next Fed chair, I'll let somebody else make that decision.
Well, fair enough, taking the Fifth Amendment on that one. Let's move on to the sales scandal. And I want to focus more in a moment on the changes you made since being CEO. But first, let's pause on the Senate hearing a couple of weeks ago, which, as we discussed that evening, did focus much more on what you did and didn't know and what you did and didn't do in the period with which it was developing before the scandal became public. Here is one particularly strong phrase from Senator Warren. She said, "At best, you were incompetent. At worst, you were compliant. You should be fired." Some strong words.
Yeah.
Political theatre aside,
yeah.
Does that sort of attention and rhetoric make it impossible for you to do your job?
No, not at all. I mean, I've got a responsibility to 268,000 team members, over 72 million customers. That's who I focus on every day. And I think I'm the right person to be the CEO because of my experience, because of my ability to make change, which we'll talk about, I'm sure, in a minute, and because of the optimism and resiliency that I have, and because I have the support of our team. So everybody's got a right to an opinion, but I'm going to focus on customers and team members.
In terms of just quickly focusing on perhaps how she formed an aspect of that opinion, in terms of what you did and didn't know during the development. 13 earnings calls when you were CFO, April 2011 to April 2014. You mentioned the term cross-sell 53 times. Did it ever cross your mind in those 53 occasions to give more information that you were aware of, to enlighten the investors listening, the analysts listening, to the full scale of what cross-sell meant at Wells Fargo at that time?
Sure. We disclosed our cross-sell ratios in the normal course. It was a non-GAAP type of a measure. I think cross-sell is shorthand for relationship management. Clearly, there was an issue that we had within our retail banking business in terms of our incentive plan and the focus on selling products as opposed to providing the right service and advice to our customers. That wasn't elevated to the senior leadership, including me, until late in 2013.
Well, that's true, and very clearly in late in 2013. I mean, so the board review says you were aware before then, but you weren't fully aware of the magnitude in 2013 until 2013. November 8th, 9th, 2013, the Chief Administrative Officer, in an email with you, notes, we're trying to limit the damage of further terminations in the short term, hoping the LA Times story doesn't become national. Goes on to say the larger sales practice review needs to be done. So as you said, very clearly, you're up to speed on how big an issue this is then. Yet, the following earnings call, Q1 2014, you mentioned cross-sell 5 times. And again, selective release of information there to investors. I'll go just one step further, if I may, Tim, because even 3 months before this became public, you were COO and president at that point. You've been involved in firing Carrie Tolstead, or pushing for her retirement at that point. So again, fully aware of everything. You were asked in an interview, June 16th, 2016, public interview, whether the cross-selling strategy had been pushed too hard, and you said no. I mean, what do you say to the investors that bought, reassured after 3 years of negative press on the cross-selling issue, read that interview from Tim Sloan, someone they trust, and were reassured about it for 3 months later to see that it was in fact a lie at that point, and the share price underperformance, they've endured it since?
Well, let me push back there. I didn't lie to, and I didn't lie to our shareholders. I didn't lie to any of our stakeholders. What I described was the fact that cross-selling, which is shorthand for good relationship management, there's nothing wrong with good relationship management. What we clearly had, and what we've talked a lot about, and you and I have talked a fair amount about it, is the fact that we had an incentive plan in our retail bank that drove inappropriate behavior. Since I've become CEO, we've dealt with that.
Sure, and we're going to come to that. This is the question you asked. On the topic of cross-selling, Wells has come under scrutiny for its strong sales culture. Is there any sense that the bank has pushed that strategy to the limit? No, was your response. Is that not misleading investors 3 months before this came out?
No, I don't think it's misleading investors at all, because I think the issue...
Is there any sense that the bank has pushed the strategy to the limit? Your answer was no.
Yeah, again, we're talking about the bank. We had an issue within our retail banking business, and we've dealt with that since I've become CEO.
Okay, but I beg to differ. I feel that investors watching now who bought the stock then and have endured significant underperformance since then because of an issue that you denied about will be feeling hard done by based on that. But
Wilfred, you and I agree on a lot of things. We're going to disagree on that.
We are, for sure. We're going to disagree on that. And you know, being CEO of one of the biggest financial institutions in the country, with that comes responsibility, and it seems and privileged position. It feels like not much has been taken there. But let's put that aside. That was the past before you became CEO. Let's talk about what you've done since. And are you happy that the changes you've enacted will guarantee that this kind of thing will not happen again?
You know, Wilfred, there's no guarantees in life. I can't promise anybody perfection, but what I can promise you is, and all of our stakeholders, that we are absolutely transforming this company. We're fulfilling the obligations and promises that we've set for ourselves. We've remade our retail banking business. We've reorganized the company in terms of centralizing many of our risk and control functions, and we're building a better Wells Fargo. And we're remediating all of our customers customers have had any issues with us.
Were you slow, though, when you became CEO to get a handle on this? 2.5 months ago, in late August, you had to increase the number of potentially fake accounts from 2.5 to 3.1. Sorry, 2.1 to 3.5 million accounts. Yet in March, 5 months ago, and 5 months after you'd taken the helm, when you had time to sort of get your handle on things, you'd said that the worst was behind you. So when you say now that 3.5 is the absolute maximum, can investors really be sure of that? Can they really believe you?
Yeah, the reason that it's taken so long is because we wanted to make sure we did a very thorough and comprehensive look. In the fourth quarter, we promised that we would go back and look at nearly 8 years of accounts that were open, 165 million accounts, because we wanted to ensure all of our stakeholders, including our customers, that we were doing the right thing with them. We've contacted 43.5 million of them in the fourth quarter. We've said, look, if you have any issues, come in and see us. And I do think the worst is behind us.
And in terms of the auto assurance issue that's spiked up on the side, rate locks on mortgages, any further costs to come of that? Any further issues that haven't been disclosed yet?
Well, we're going to continue to look all across the company. I can't promise you that we won't find something, but what I can promise you is that we're fulfilling our obligations and promises that we made. We're turning over every rock. We're improving and building a better Wells Fargo, and we're being incredibly transparent about anything that we find.
In terms of all the things we've discussed, obviously so far, you were obviously a senior executive at the company throughout the period, and you've admitted plenty of times that you could have done more and wished you'd done more during
Absolutely.
That period. At the same period, thousands of junior employees lost their jobs. Some of them, many of them, wrongly. I wonder whether your presence here at the top today is inviting ongoing negative political attention and media attention, earnings impact we touched on before, and with it, significant share price underperformance, not just since you took over immediately after the scandal, but even year to date, when it's very much under your watch. Do you take personal responsibility for that share price underperformance, or is it the fault of John Stumpf in the past, or issues of the past? Well,
Wilfred, I'm the CEO of this company. I take responsibility for the actions of this company every day. I don't think I'm a liability for the company. The moment that I would ever think that, I'd step aside. I'm not going to step aside because I'm an asset for this company. We're moving the company forward. I think that the transformation that's occurred in this company since I've become CEO has been unprecedented. We're not perfect, but we are making progress. You see that each and every day. You talk about our team members. One of the things we talked about on our earnings call on Friday was the fact that our turnover now is at its lowest level in 6.5 years. That means that 268,000 people every day are saying, I like Wells Fargo, right? I want to be here. I want to serve our customers. I'm really proud of that.
Well, Tim, congratulations again on the first year. I'm sure it's not been the ideal first year, and we appreciate the time today to mark that first year of your time at the top.
It's good to see you and appreciate being on here again. It's a privilege to be the CEO of this company.
Tim, thanks for joining us. Guys, back to you in headquarters.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.